The markets look to be climbing the wall of worry as investors chase prices higher and also push up volumes. Gary Glover's been looking at the companies over the last few weeks that are poised and ready to move as the market turns. The market has started to run, so he's here to guide us through and explain the charts. Good morning, Gary. How are you?
Yeah, I'm good, Chris. I'm very good. How you going?
Well, I'm happy to see the report. You've picked a fair few fairly well, and there's one stock in here that when this report comes out before market open on Monday this week, you'd put it as a buy and it just roared ahead all of Monday. So that's clearly a good trade, but I'm getting ahead of ourselves with the specific stocks. As you're looking at the market, what does this rally look like to you that we're seeing both in the Aussie and international? How are you reading the overall market movement?
Yeah, I mean, it's just really constructive here, Chris. So, I mean, there's so much sort of doom and gloom out there, so many bears out there, so many reasons as to why the market should go down. Yet the price action, is not showing that and hasn't sort of showed that. And then on our worst days and our negative days and our bad news days, we've seen volume probably at 80% of the average volume. So we haven't seen any aggressive selling going through the market there. So we're seeing a bit of we've seen sort of constructive price action. We've also saw a follow through that day there last week, Chris, which where the index is up over 1% above the previous day's close and up on stronger volume. So they're often very good, not a good omen there, but they're usually characteristics of every turnaround. We normally see a follow through day sort of early, I think, what's it, day 4 to day 12 or something, or I think it's normally day 4 to 7 is where they most often happen through, but they can go through a bit later as well. But we're just seeing constructive signs. So we're seeing a bit more volume on some of those up days. We saw a good follow through day, stronger volume there. So not seeing super aggressive, super high volume. You're just seeing constructive volume, and then you're not seeing aggressive selling on the pullback. So yeah, so that kind of more paints a picture of a bit of a building period there. And look, we've always sort of, I mean, I've sort of suggested here that if you look back at that 2002, 2003 sort of low there, that took time to build, and more than likely after a fairly substantial growth crunch, that's likely to happen again here. So that's actually exactly what's happened, Chris. Was sort of this has taken, we've had our October low, we've had a bit of a bounce, we've sort of retested, made another higher low, pushed up, made a slight new high. So basically made a first, we've basically made a first, first and second sort of higher high. Made now sort of one, maybe two, so some of the next has made sort of 3 high lows here. So it's just very constructive here. I mean, if you look at the S&P 500, that is as textbook as it gets. So we've got our sort of washout low, we sort of bounce back up in the range, we pull back, we break through the upper band. So now basically change of character, then we pull back, retest the break zone, the trend line, and then we go there. So, if we look at, I mean, there's the ideal trade, and I think then there's the, if you look at Stan Weinstein's sort of, the base building sort of setup there, if you characterize that sort of textbook wise, it's done the perfect sort of setup here. You might be looking for some slightly more aggressive volume there, but even the sort of Stan Weinstein sort of the ideal buy, that sort of starts off with sort of more medium sort of volumes there. So I think if you sort of go to that last sort of chart in there, there's a couple in Stan Weinstein's book. This was the one sort of on page 60 there, which is sort of the ideal buy for investment. Just basically that's the 30-week moving average, and it was basically sort of we either sort of wash out, or we do a bit of a building process there and then kind of, retest and then sort of start building from there. And then, it's a matter of sort of getting a higher low too, coming back and retesting, the break zone, and then just sort of building slowly there. And then, notice most of that period there, the volume is pretty, is lightish, and then it should just sort of start to improve here. So far this looks textbook. What we want to see now is start to see some volume start to arrive and start to get stronger there. So we're seeing a couple of follow-through days. We're seeing a couple of stronger volume days. So we're starting to see that permeate, sort of through the market here. But we want to sort of see, we need to see a bit more of that, Chris, as well. So the next few weeks, we want to see in volume start to increase. We want to see a few more bullish days there. So it still might do a little bit of work here. That was still a bit of a building process there. So it's not going to be, not going to go straight up here. But it looks textbook. That's all I can say is that if we went through and look at history and the textbooks and what they want to see, so far we're seeing everything by the book.
Well, let's just jump back because you've spoken about the NASDAQ, the 2002, 2003, sort of reliving that, the S&P 500, doing that textbook, so coming out of the channel, breaking out of it, coming back to retest it, and then bouncing off it. The Aussie is very much a different story. You've spoken about this for many weeks now. We did come back closer to our highs out of the COVID rally. We came back close to it. But here we are, we've pulled back. So we came down much harder in March and sort of like retested these lows. So are you concerned with the speed, or how do you interpret this?
Yeah, so definitely a bit more concerned about the Aussie market. Just for two reasons there. After the crunch, we tend to find lows a bit later in the cycle because of sort of commodities being typically sort of being late in the cycle as well. They tend to sort of find their lows a bit later than the growth and other shares there. So but the price action has come back a bit deeper as well. So that's a bit of a negative there. So to me, I was like, okay, well, what are we going to see off this sort of low there? So if this is going to have the potential to bounce up or maybe go back and retest the high, then we want to see something impulsive, Chris, and we want to see some strong volume. And actually, we've got that. So now we've sort of got a cluster there of we've got that really heavy exhaustion of volume on the low week, which obviously, that highlights obviously we're selling into that, but also someone's going to step in front of that as well and buy there. So that exhaustion and volume can be the buyers sort of stepping in as well. But yeah, so basically we've had 3 weeks there now, the low week, inside week, and this really strong impulsive move up week here of pretty decent sort of higher volume. So that's actually sort of pretty positive. So that's, in terms of being bearish, if we'd seen a bit of a bounce here and the volume really dry up and be quite light, that would be a concern. So the good news is we've actually got a bit of volume there. So that tells us maybe we can bounce a little higher. I was looking for us to sort of maybe bounce back towards 7,200 here, but I think this has got the ability to bounce a lot higher here now, just because so far we've seen a bit of strength there. So good signs there from the Aussie market there so far, showing a bit of strength there, which is kind of positive. So yeah, so look, we'll just see how this rallies here. Also got the big seasonal bias here at the moment too, Chris, as well. I mean,
dividends being paid out.
Yeah, and look, if anyone sort of followed the seasonality of the ASX 200 there, I mean, April is one of the best months on the 12-month calendar there. So it's basically, I think it's pretty much the strongest month there for us. So apart from maybe sort of December, but yeah, so December and April probably some of the strongest months for the index. And that's right. You basically got dividends. I mean, you can argue there's different reasons for it, but yeah, one of the most logical is that you've basically got dividends flowing back in. They tend to get spent and drive the market up here. But seasonally as well, there's just a lot of strength there. So that's obviously, they've got your widely known phrase, sell in May and go away. But typically markets will sort of run up into early May, and the cycle, our seasonality cycle is pretty bullish and agrees with that cycle at the moment is actually aligned. So really sort of March into May would suit a bit of a bullish move here. So it looks constructive there. Don't expect it to be a straight line here. I think you'll still sort of see a little bit of up and down here. But yeah, so far so far some good signs there for the ASX 200.
Well, if we move over to the Dow Jones, you've talked about seasonality, and we did talk about the Dow Jones being the strongest out of those October lows. It definitely led the indices, but for the last few weeks and months, it's been sort of the underperformer. Looking at the quarterly performances, the tech stocks did have a stronger quarter, but this has sort of been left behind.
Yeah.
So how do you read what's happening on the Dow Jones?
We're starting to shift a little bit there, Chris. We've sort of, I mean, obviously last night was a big, I mean, the NASDAQ was down 20, 30, and the Dow was up, what, 200 or 300 points. So, and we saw another day there last week too where the Dow outperformed. So actually starting to see the Dow show a little bit of outperformance here. So yeah, being reasonably robust. So some good signs there for the Dow as well. Got that really deep low there. I mean, I love the sort of Williams percentage R. You know, this indicator down here just picks up all the deep buys. I mean, that I think I've sort of mentioned to you previously that October 2020 low, that pullback, and at the time there on an indicator said the market was almost as oversold as it was into the March low. That's the indicator. And I've noticed this out of the deep lows, out of those sort of big lows, the next sort of higher low is always a good low. I mean, that's oftentimes some decent moves come out of there. So we saw a decent move out of that October 2020 low, but I've seen this in the past there, and at times it's made me curious as to why this indicator is showing to be just as oversold, yet maybe the market went through like a bit of a sideways shimmy like that October 2020, but it's always been some powerful moves out of that. So I actually think that's a pretty good signal. Just I mean, it's not an indicator. This is not an indicator which gives good sells. It's sits in the sell zone a lot and too often, and I wouldn't use it to sell stocks at all. But it does really tend to pick up all the deep lows, and it picks up the first sort of high low pretty bang on all the time. So yeah, that's pretty constructive. I think on the Dow here, we just really want to sort of see the price break out above that little pennant flag there. I think if it breaks out of that range, that'll be confirmation that the market's going to kick on here and possibly go back and retest the high. So I don't know it's a big call to be saying that, but I think if it breaks out of that pennant, so what's that? Probably get to around 34,000. Breaks above there, then I think if it breaks 34, I think it goes to 37. Well, goes back and retests the high. So I think it looks pretty positive here so far. So we definitely plenty of FOMO will kick in there too, Chris, because we're sort of everyone's fairly underinvested here. There's still a lot of bears out there, so still a lot of people short. And if markets keep going up, they'll get squeezed. They'll have to basically buy back their short, and those that are sort of not long here and that are sitting in too much cash as the market keeps going up, they'll be forced to participate as well. So that's the psychology of markets sometimes, is that they almost forced you into sort of buying when maybe you're uncomfortable about doing so.
Well, that's probably a good point to move over to your trading shares for this week. And we start off the list, which is an extensive list this week, with corporate travel. Now, these charts, you're normally doing them over the weekend. So this is Friday closes. The report's coming out Monday. This one went out before market open. And do you want to fill us in with what happened Monday morning?
Well, to be honest with you, Chris, I was actually disappointed in myself for actually only having a 6% weighting here. It's probably one of the stocks that I probably, I like the sector. I think corporate travel has been so well managed here throughout the pandemic. They didn't have to raise equity, even made a small acquisition there. So this is a stock here that, unlike sort of Flight Centre and Air New Zealand, Webjet, where there's so many more shares on issue because of equity raising there, that those stocks are never going to be able to go back and retest their highs. Corporate travel does have the ability to go back and retest the highs there, only because of the amount of shares that are on issue have been quite minor, probably just executives, performance share, things like, so. But yeah, I think this one's really got, big potential upside here pretty constructive there. Just love the fact that we sort of bounced pretty strongly on a pretty good result and then gone sideways through that little, 5 or 6 weeks there, and then sort of starting to break out here, and just starting to see a bit of volume come in. Bit of an inverse head and shoulders there. I'm not a big head and shoulders pattern there, but definitely a bit of symmetry there. Just overshot the descending wedge, which I love. Exhaustion of the low, nice rally, and then so it just looks pretty constructive to me. So I think there's potentially, this has got legs for me. This is probably, and this is me personally, sort of one of my largest sort of holdings there. So I think it looks pretty good here. It'll have a few little back and forths here, but I do like that stock there. Just meets the love the chart, love the fundamentals, love the sector as well. So it's sort of ticking quite a few boxes, really.
Nice. Well, it has Monday it broke out, rallied very, very strongly, got through the breakout point that you're looking at 1832, temporarily throughout the day, or intraday, traded above 1908. I think it closed just below it. So for those who got your report, they did really well and picked that up as you're criticising yourself for only having a 6% holding. If that's the worst you can do with a position, then that's all right. Your other one that you put in here is Seek. So they've come down here. We're excited to see the FB, false break, or springs. Some people look at them the same way. What's the false break and then this congestion up here? How are you reading that on this pattern?
Yeah, again, so a little bit similar to sort of corporate travel. Probably not as robust there because I've probably seen a little bit more selling in that congestion, which is not perfect. So so that's sort of, you normally want to sort of see the volume pretty strong here, and then maybe a little bit lighter in the congestion there. But we did see some of those volume bars sort of on dailies where we're sort of coming off the lows there. So sort of got to drill down into your daily sometimes just to sort of have a look in there. But we've gone up there 4 or 5 weeks, and then we've gone sort of sideways for about 6 or 7 weeks there. Haven't taken the low out, so still pretty constructive there. I noticed it did sort of pop out of the range there early in the week. Had a bit of an update this morning, which was a bit of a negative, but really only a 1% downgrade. So it's not really. I mean, we're basically reconfirming guidance saying they'll be 1% short, but I think they'll lower costs as well. So that's sort of. It was off a little bit earlier, but it has sort of firmed up here now. So I still like it, actually. I still think it's probably an opportunity to top up here on this negative news here. But so I consider 1%. It's funny nowadays. Companies have got to sort of keep giving guidance. Keep updating the market there. So yeah. So whereas a fund manager who had a 1% swing either way in his portfolio is probably not going to have to update his shareholders, but companies really do now, even for sort of minor swings, stuff like that. So, but sometimes these things create opportunities. So, I still think it's sort of constructive, but probably just not quite as bullish as some others. Like I said, a bit more flatter, the volume a little bit lighter there, but still view it as sort of being constructive there.
Well, we move to another one which has a triangle on it. So ResMed, you've got 10 to 1 in here. But what's this triangle? How do you trade this sort of setup?
Yeah, so it's a little messier there, but we've still sort of got a congestion pattern there, still got a tightening of the ranges in there. Got a little BCP in there too, Chris, as well. So volumes have been pretty constant sort of through there, not sort of heavy or light in that period there. But still view as sort of being somewhat constructive there, and well, look, if we break out of this sort of congestion there, can definitely sort of kick on. And so I think yesterday actually did kick up quite strongly, pretty strong volume, and I think we're sort of down a little bit today. So maybe sort of still hugging that range there. So definitely want to sort of keep an eye on here. I think this can show sort of signs of being constructive here this week. Then I think it'll probably kick on and take out this sort of short-term high. There was that 36 or something. So, I still think looks fairly constructive there to me.
Now, another one, you've got Credit Corp here. So having a look at Credit Corp, you've got the false break in here again, and it's much closer to the right-hand side of the chart, so very recent. How would you, what are you looking for here? Is it ready?
This looks quite good to me, you know. Yeah, and we've had basically a pretty decent pullback there, sort of percentage-wise, for a stock that probably doesn't have those sort of big percentage moves normally. Bit of a five-wave structure into that first low, bit of a strong bounce, a little three-wave, and then they come back and retest the low there in pretty quick time. The thing I like the most there, apart from the false break, is that the volume cluster the last 3 weeks as well. Just sort of showing some volume coming in here, the stock here. So again, pretty well managed company in the past. Pretty smart operator in the space, probably the leader in this industry, and it looks pretty good here actually. So it unfortunately has sort of popped up out of the range there. Hasn't given me a chance to buy it under 17 here as yet. Maybe a little bit like Reese there, sort of didn't give me too many chances to buy that one there. But yeah, it looks pretty constructive. Looks pretty constructive. It's a stock there can be pretty lightly traded. You know, as you see through a lot of those periods there. So when you do see volume, it's pretty important. So yeah,
the volume does vary a lot, doesn't it? You had sort of that Christmas period, super low, and then comes back, huge volume.
Yeah, that's right. I mean, even through that whole sort of bearish phase there, the volume wasn't that constructive through there. There's a few heavier weeks in there, but not too many sort of, you know, not too many sort of obvious things in there really. Yeah.
Now, Kogan, you've got in here 0, 1, 2, 3. The 0, 1, 2, 3 pattern, you did exceptionally well on the second half of last year. So encourage those to go back and have a look. We'll try to put a link on screen to one interview where you went through in a bit more detail on the 0, 1, 2, 3. So we're excited to see this back. It is on the weekly. It's a massive time frame that you've got this over. So is that harder or easy to trade a 0, 1, 2, 3 on that time frame?
Yeah, well, it's interesting here because obviously Kogan actually found its low in July last year. And so since then it's been building. So obviously, you know, sort of the sector's a little bit under pressure at the moment. Everyone's sort of, you know, saying stay away from retail with interest rates and, you know, potential recession coming there, things like that. But the stock's really had a massive plunge in price, big price correction there. Just starting to build here now. So really sort of, you know, we've sort of got a first high low, second high low, third high low. The thing I sort of keep seeing in here is not seeing any selling, Chris, on the pullbacks. So the selling so far has been pretty light. You know, all the pullbacks have been pretty light. So it just seems to be sort of building a bit of a base here. You know, beauty of sort of buying near the last swing low with a stop just below that is that your stop is pretty tight, so you're not risking much. And if you get a big move here, then your reward's pretty high. So that's the beauty of this sort of 0, 1, 2, 3 pattern there. It's sort of, these bases, sometimes they take time to sort of establish themselves, and then they'll sort of kick up out of the range, maybe pull back, sit on top of the old high and then go, a bit like those sort of textbook examples there. But yeah, just starting to look interesting to me. It's obviously still a bit of risk here with Kogan for sure. I know that to understand that, with the shops open, people are definitely going back to shops more than they were obviously in COVID period where they're just doing everything online. But still, I think we may have priced a lot of that in here so far with that move here. So, but yeah, just definitely want to keep an eye on there. Just looks sort of constructive there at the moment.
Well, you're talking about retailers going back to the bricks and mortar, the supermarkets. They're out there using their feet physically in the stores. Temple & Webster, they did do very well with the online trade in COVID, and the chart says so. When you're looking at Temple & Webster now, what's caught your eye on this movement?
Yeah, well, I was sort of looking at, when I saw that bounce there out of that July low there, went from, sort of $3 up to $6 there. It's basically doubled in price for that period there. So a nice little bounce off that pretty deep pullback. But now it's sort of come back to retest that low. And they just sort of a little bit looked like a bit exhaustive low on the daily there, a couple of weeks back. And then it has bounced since then. A bit more volume came in, and then it pulled back and then made a sort of higher low. Okay. So when I actually went back and looked at the weekly and looked at the longer sort of time study, I realized that this was very close here to a long-term trend line. Something similar happened to the Shanghai there, a few years back, where if you go back and draw a 10-year sort of line there, you came back and retested that again. That was where it actually had a really decent bounce from. So may not, there's no false break here, but we do have an old trend line, a bit of a key support there. Just starting to see a little bit of volume come in there as well off that low. So maybe it's sort of, the market's sort of starting to look a bit more growth there, Chris, as well. So growth stocks starting to get a little bit of traction there. So some of these stocks that have been beaten up pretty bad here just might start to attract a little bit of attention there. So me personally, I prefer to sort of stay with stick with the leaders there. So probably, don't trade number 3 or 5 in the sector there. Probably just try and stick with number 1 or 2. So I think Temple Webster is definitely one of those ones that was pretty strong sort of name in the online sort of space there. So I think this is decent proposition down here actually. So I think things like this, Chris, is sort of you've got to I haven't actually bought any here, but I just sort of waiting for a bit more signs there. But if I was going to buy any here, I would just sort of start small with some of these positions there. Just sort of start with a small position and maybe just sort of try and build over time there. So still some risk with these stocks and these sectors for sure. But just starting to see some constructive signs there.
It's a bit early to tell, sort of to measure out what sort of profit target you'd be going for. But if you're looking to build a position over time, start little, look for some more setups, look for maybe a pullback, more confirmation, add a bit more. What sort of time frame and ideally what sort of return, if we just use Temple & Webster as a bit of a gauge, obviously the setups aren't there yet, but would it be months or possibly a year, or what time frame?
I think probably not so much a year, but I think over the next sort of over the next month or two there, you want to sort of see that signs there. So the beauty is sort of down here is you'd have a reasonably sort of tight sort of stop here. Probably I'll be using that low as my stop. I wouldn't want to sort of see it break that low here. So I might sort of start with a small position there. And I just want to see corrective activity. So I want to see, maybe it bounce a little bit impulsively, have a bit of a, corrective sort of sideways sort of move there. Whether it's a little VCP or whether it's the first high low or second high low or sitting on top of the previous high, just some sort of construction there that's positive in a manner there. So just looking for those sort of type of things there. So definitely starting small here, but just sort of building into it from there.
Right, well, that's a good one to keep an eye on. The last one for the report is Life360. So we've got a few things going on here, some green lines, some red lines, support, and the critical FB, false break or spring. So how does the false break impact the trade that you're looking at here?
Yeah, definitely a little bit of a theme here. So looking at some of these sort of beaten up growth names. Just I guess the two interesting things here is that price level we're looking at there, that sort of 460 zone there. That's been a really prominent support zone so far, and it did break through there recently, but failed to kick on there. And we've seen a bit of a cluster of volume there too the last few weeks around that low as well. So possible signs of accumulation of that low there. So again, might just be a classic ABC little 3-wave pullback, come back to sort of key support zone, and then might sort of start to build again from here. So this is definitely one that I'm keeping a close eye on there, just because that last move was pretty decent. I managed to sort of catch some of that of that last leg up, not that one there, the previous one out of the July low, sort of. So this was definitely a stock that can move. Bit sort of higher beta, but just want to be sort of sure about as well. So again, I haven't bought any of this here yet. Just watching this pretty closely there. Just want to see a few more constructive signs there. But just like the fact that some of the growth stocks are already starting to show a little bit of strength. So the big ones went first, and then you sort of filter down to the mid caps, and then we move to the small caps. So as everyone was saying there last week, Chris, that only the top tier stocks were moving, and the second tiers weren't moving. Or that the the thing about that is that's exactly how it starts. So when I heard that, I thought, well, that's perfect. That's exactly how, that's how exactly how the early phase of the bull market should start. It doesn't. Not everyone rallies here together. People. The money comes in and it goes to the safest. And it goes to the leaders first. It goes to the ones they think. There's almost the sure bets, you might sort of say. And then as the market starts to rally there, then they start to take a bit more risk on board. They'll filter down into the mid caps, and then as the mid caps start to rally, then everyone thinks, oh, okay, well, we can start to look at some of the riskiest areas, which are the small caps, and then move there. So there's definitely a phase that the market goes through, almost not so much an evolution there, but the general steps that are taken each and every time here. It always makes me curious when people sort of say things that are almost unfounded. It's like, have you actually studied a bull market in the past? So it's you to see the classic same things in bear markets as well. You sort of see, we've talked about obviously how markets get thinner and thinner, and the very few do the lifting at the end. Those are the classic signs, mate. That these things are always prevalent in each of these markets there. But why do so many fail to take heed of the path when they're almost sort of we're almost sort of sure to guide you sort of to the light there. So look, that's my sort of my whinge complaint for the day. But look, I'm happy that there's so many out there don't look at these things. So maybe that gives us the edge, and that if everyone knew, then maybe we'd be chasing our tails. So thankfully, everyone's very slow to pick these things up and almost too late. It gives us a little edge and gets in front of the market there, which is fantastic.
Well, that's the edge that you want to have for trading, and that's definitely what you're picking up in your report and sharing with the clients that you're trading with. So we'll say thank you very much for sharing those insights, both trading, indices, cycles, and all of it, putting it together. So thank you, Gary Glover from Novus Capital.
Thanks, Chris.
And Gary's mentioned a few things in there, springs or false breaks and other patterns. There's a whole playlist on the right-hand side. And then there's also where he goes through and picks out charts from the top 30 or the 30-30 list, top 30 momentum companies and top 30 launchpad stocks. That Friday playlist is on the right-hand side. And to follow Gary on Twitter, his handle is on the left.